Hi there, Donna Jarock, your Colorado Realtor, 28 years helping buyers and sellers in the metro area. Joined today by my lending partner, David Hosterman, with Citywide Home Loans. How are you, Dave?
Doing great, Donna. Thanks so
Why don't you
much
tell
for having me
everybody
here.
how long you've been doing this?
Yeah, so my name is David Hosterman. I'm the regional manager over at Citywide Home Mortgage. I have been working in the Denver metro area for 20 years now. This is my 20th year helping consumers and borrowers with all their finance needs in relationship to buying properties.
I think you and I maybe, 12 years we've been going on? 10, 12?
Probably,
Yeah.
yes. I remember the day that you called me asking if I could help out on a deal, and ever since then we've been working together extremely well
And
and
that
helping
happened
consumers.
because I had a lender that was letting a deal fall apart for one of my buyers, and Dave came highly recommended and haven't looked back ever since. We've been doing business together and lots of business and lots of happy buyers and sellers.
Yes,
All right. One of the loan products I really like right now is the second mortgage that somebody can couple with purchasing an existing home that has a very low interest rate on that first mortgage and assuming that mortgage. For example, I have a home for sale at 650,000. There is a loan balance on that property of about $400,000. However, that interest rate is at 2.75.
mm-hmm.
We haven't seen that in a long time. We probably won't see it ever again, I'm guessing, but never say never. That is a fantastic interest rate. However, in order to get into that home, you need about $250,000 to assume that first mortgage. Unless you just sold a house and you have a bucket of cash with you, most people don't have that. Dave's office does have a great product that will allow you to put a second on that property as long as you have 10% down. So, for the example we're speaking about, you would need $65,000 down. Dave's team would give that second mortgage at 10%, roughly give or take, and that does change based on what the interest rates are doing. Do not let a 10% interest rate on a second mortgage scare you, because your blended rate between that and that first mortgage at 2.75 is going to bring you in around 4.9%, much lower than what somebody can pick up in the market today, right?
Yes, I 100% agree with you, Donna. And to get back to your interest rate standpoint, interest rate is definitely dependent upon market conditions and volatility and is subject to change on a daily basis.
Right.
So just want to throw out that quick disclaimer out there. But in relationship to assumable loans are fantastic options for consumers that are looking to get into a property and maintain a low level of payment. Um, Assumable loans have to either be a USDA loan, a VA loan, or an FHA loan. Essentially, the reason why is those are all federal government-backed loans. They have to get the current
Right.
lender's approval in order to do that. And like Donna mentioned, you have to true up the difference between the sales
Right.
price and what the consumer currently owes on that property. And the best way to do that is to get a second mortgage at a higher interest rate that
Right.
overall has a lower blended rate than
Right.
what the current market conditions are showing.
And there's nothing preventing you from throwing extra funds at that second mortgage with your tax refund or a little bit every month towards that you have excess in, getting that second mortgage paid off, and then you're left with a very favorable first mortgage with an extremely low interest rate. So if you're not working with a realtor that is willing to help you find those properties, make sure you let me know. I would love to help you do that. There are a lot of homes out there that have interest rates well under 4%. And again, the older they are, the lower the interest rate most likely. So it takes a little bit of digging. It can be done. So if you are lucky enough to have that 10% down or more, let's talk about getting you into a property that has a low interest rate on it, thereby saving you. The example I just spoke about, it is literally almost a $1,500 a month difference. Taking that product with the assumable first, the second in place, than it would be if you put 5% down and just started with a whole brand new mortgage.
Well, and the cool thing about those loans is once you obtain that FHA loan and that client goes to sell, and say something happens with that client and they have to relocate to a different state for work purposes, or they get divorced, or their family increases in size, that client can sell the property and that their new buyer can assume that loan.
Oh, that's correct, because it
So,
stays like that
yes.
until somebody refinances out of that house.
Correct.
So if there is a VA assumable loan and an FHA assumable loan, anybody that can qualify for the FHA property can take over that loan. However, if it is VA, they have to be a veteran, correct?
Correct. Yes, they do. And
Okay.
they do have to get Veterans Affairs authorization in order to do that. They have to meet their eligibility requirements through their certificate of eligibility, which is no different than a normal VA loan. Closing on an assumable loan is going to take a little bit more time, but if you're patient and willing to wait it out, like Donna mentioned, you will be saving hundreds, if not thousands of dollars.
Oh, easy. And over the lifetime of that loan, I can't even do the math on that, how much you're saving in interest.
Well, you're maximizing the best potential of principal reduction
Right.
on the loan, because that interest rate is significantly lower.
Right, exactly. So again, consider looking at a property where you can assume that seller's first mortgage. It just requires you to bring in that difference and making that seller whole. There is no negative to the seller. Don't let somebody tell you that most sellers won't do it. It is exactly the same to them when they get to the closing table. They are no longer responsible for that mortgage. It is now your mortgage. They are walking away with all the cash that they had planned to walk away originally with. Also, to Dave's point, it is not what it used to be where it could take 60, 90 days or longer to do an assumption. They are getting done fairly quickly now. I've seen many of them going in under 45 days or less. Again, being prepared with your documents, what you need to assume that mortgage, it's no different than starting with a brand new mortgage. You will still provide the same documentation. The qualifications will be the same. It's no different. You're just going to walk out of there with a fantastic interest rate, right?
Yes, 100% agree with you.
All right. Keep that in mind, folks. An assumption is your best friend. We appreciate you taking the time to watch these videos, and if you are ready to bite the bullet and get into a home in 2025, we invite you to give us a call. My number is 303-718-6285. Dave?
Thanks so much, Donna, for letting me participate with you during these videos.
Absolutely.
And again, if anybody has any lending questions or lending needs, feel free to give me a call on my cell phone. That number is 720-260-9814. We are here to help you with everything finance related.
The other thing I want to leave you with before we sign off is, if it is a no today, they are not just going to let you walk out the door and worry about calling somebody else later. They're going to help you figure out what it is that you need to do to put yourself on the path to home ownership. So if worst case scenario, you cannot purchase today, you will know what you need to do to be in the driver's seat and get into a home. Maybe that's 90 days from now, maybe it's 6 months from now, but they will help you figure that out.
100% agree.
All righty. Make it a great day, folks.